Peter McGuire, who joins in with a quick update on what he's picking up with regard to world market cues. Morning, Peter. Thanks for joining in. Peter, how are things looking? We've got some important data points coming in from the world this week. You've got the Bank of Japan meeting. You've got the FOMC meet as well. The dollar is looking a lot healthier this morning. If I had to ask you to put this in perspective, it is strong risk-on trade is back on the street.
Well, good morning, Samina. Yes, I think you're right. I mean, it's been a very nice morning considering what we've seen in Asia trade over the last couple of hours. Tokyo, Australia's up, and things have been relatively, it's been a nice uptick. It will be a very interesting week building off last Friday's results as far as what the Dow achieves, of course, and the S&P through those, magical numbers. So I think there's onward and upward. The US dollar, still there's some concern there about, how it's trading at the US dollar index under 92. We've seen crude oil rally hard and over the last, say, 3 to 4 sessions, and gold's come off. So that's pretty much what I'm keeping a close eye on, and I think it's going to be a very interesting week for traders.
Peter, what are you expecting from the Federal Reserve this week? Any sort of big announcements could be anticipated?
Well, it's a hard one, Selena. I mean, when you think about it, there's been so much conjecture as far as will Yellen or won't Yellen pull the trigger. We all understand that the US dollar's come off and has been very, very well sold down, so that's taken a little bit of heat from them. And then the other side is, the unemployment numbers, certainly, that's a reality check each month. But I would say that the jury's still out. They may get a rate rise this year, but there's, I don't know, it's now at the end of September. I think that it's probably a 50-50 swing whether you're going to see something and see Janet Yellen, hand on heart and say, yes, we're going to see, a rise. Though, I think personally, I'm probably sitting on the other camp, and I don't think we will see anything before the end of the year. That's our opinion at the moment. It's a hard one to judge by, but I think that's where the market's probably interpreting the data at the moment, Samina.
Right. Peter, what do you think about gold? Because that's one pocket that we'll be watching out most carefully after the minutes are released or after the press conference. 1300 seems to be a reasonable and a good solid support now after having scaled that, but we are still off around $40, $42 from the high on September 8th on the COMEX.
Well, exactly right. I mean, we saw 1363. It's currently trading at around that 1320, 1322 number in Tokyo this morning. I think there's probably a little bit of downward pressure, though it's been fairly well sold off, probably over about the last, say, 9 or 10 trading or 9 or 10 days. And it may be due for a bounce. Markets don't keep on retracting. There's normally, it has a little bit of a bounce, and I wouldn't be surprised to see that around that 1316, 1317 sort of number and bounce back up. Again, we're waiting to see what goes on as far as BOJ, the FOMC, what impact it's going to have, and if there are any surprises coming out, then that maybe the market's just taking that or digesting those sort of numbers and realising that, the heat's come out of it, the geopolitical tensions with North Korea, whilst they ratchet up and they fire missiles, nothing concrete has come up. And I think that's probably a real reality check for a lot of traders over the last, 3 to 5 sessions.
Peter, what do you feel about crude oil then? Now, actually, obviously, the gap between WTI and Brent is also a little elevated at $5 per barrel. When do you think that could normalize to the range that we typically see of around $2 to $3? That, and secondly also, as far as the MOMR report was concerned for August, countries like Libya and Nigeria were a little uncomfortable for OPEC on the fringes. Nigeria has already reached 1.8 million barrels, that level where it said that they will start adjusting. Overall compliance seems to be good. But what about Nigeria as well as Libya?
Well, I think first off, the Brent's flipped into, that backwardation stage. And so we're still working off the back of Harvey. We've had, rig count down and, of course, the refinery side of it. And you've had more imports as far as Brent. That's certainly pushed it up. The other side, of course, is, where you're looking at as far as North Sea production. We've got a cut in output. It's that time of year as far as you've got refineries, you've got certain works going on as far as getting everything back online. And so it's just a work through at the moment. I'm a little bit surprised that you've seen that widening now to, that $5.50, $5.60 spread. I think it probably will narrow over the next couple of weeks, and I think you'll see production increase across that, US belt as far as rigs and the refineries back online. And I think overall, the crude market probably had hold around about these levels. If you don't see anything dramatic happen, and then you're looking at the likes of Nigeria and Libya, as you mentioned, we're still 3 months away from, or 2 months away from those that meeting in Vienna come November 28 or 29. So I think the jury's out as far as, where we're going to see crude trade, but I think it'll probably be lockstep around this sort of number, the high 40s to the early 50s for WTI. I think it'll be ranged out over that sort of, next couple of weeks. I can't see anything dramatic pushing it out further than that.
Peter, let's talk about commodities, because on the Shanghai Exchange this morning, steel is looking weaker for the third straight day. Aluminium is slightly soft as well. Copper is looking to lose out. Apart from zinc, I think most of the commodities are under some pressure. Are you expecting the rally to resume for commodities, or is it time to take profits off the table on base metals?
Well, they've had such a strong uptick, Samina, and that's been the real, it's been a glory trade for a lot of traders. When you like the looks of copper and aluminium, they've really moved very, very nicely over the last, matter of months. And they've come under a fair bit of pressure, in the last couple of days, probably similar to what we saw gold come off. You're looking at aluminium have a pretty solid fall in the same sort of, I'm not saying percentage-wise, but certainly over that time. They're very, very volatile, and that really needs to be also considered from a trading perspective. But if you put your mind back to something like aluminium, you were 1,600 a metric tonne going back this time last year. Now you're sitting at that, 2,050. It's had a very nice move. I mean, that's quite dramatic when you really think about it. It's up the best part of really 30%. Copper's probably up 35% in that year. So whilst traders probably look and they say, well, we want something to be, shoot the stars at every week, you've also got to be conscious that it's been a dramatic push-up, and markets probably take a little bit of a breather. And, where this time last year, you had a low of 4,600 on copper. You're now just at about 6,600 or 6,500. That's $2,000 a metric tonne on 4,600. That's a huge lift, 45%. So traders must be very, very happy, really.